Good evening. Ira Epstein, and here we are with your financial market wrap-up. And this wrap-up is for the evening, as we're now here on Tuesday. And we're at the 10th of September, 2024, just a couple of weeks away from going into fall. Can you believe that? How fast it comes? We're already watching football. And there's going to be a big football game tonight because we're watching maybe the only presidential debate between Trump and Harris. And obviously, both have a lot on the line. The race is a horse race. I would say from everything I'm seeing that this race is crucial to both candidates. Now, if they both did really well and stuck to the topics, we might even get a second one. But if one does poorly, I'm not sure that the other will give in because they'll think they got the knockout blow. We'll see two personalities at work that are very different. We're going to see traps laid by both parties. The question is, can Trump not be Trump and just talk about Trump all the time? Can Harris get away from her immigration, her policies on our borders, which are a disaster? Can she get away from other parts of the inflation story? She can't get away from that. She was part of the administration. So she's got to figure out how to distance herself. And in all honesty to her, not many of us know many things about her. She really was a laid-back VP. You rarely saw her. She rarely gave press conferences. She rarely did much of anything. So this is her chance. I don't say that negative. This is her chance to introduce herself to the American public. And obviously, this is going to be about the people that love Trump and the people that hate Trump. And that's a big part of tonight. Beyond that, what we've got, we're going to get in the morning the Mortgage Bankers Association. Well, that should be interesting. Have the rates come down now hard enough? And you know they've been falling. I mean, I was looking today at the 10-year notes at 372, 371. Come on. Mortgages tied to that. So pay attention to that. The Consumer Price Index. Well, the Fed's going to look at this in the day after I think we get the PPI. But are they going to be down enough to sway the Fed? Unless there's big numbers here that scare the Fed off, do you think 50 basis points or 25? The battleground is there. I mean, every day there's a new article on somebody for a 50, somebody for a 25. At this point, I am in the 25 camp. We'll see if the numbers change that. Today's API numbers in oil, you can see we had declines everywhere, and that did support oil. And this is a chart I want you to take a hard look at. These are August online grocery, not in the store. You go online. I want you to look at how the numbers have crashed all of a sudden. Do you think that has anything to do with the election? I'm sure it doesn't. It's just coincidence. Okay, we'll find out if that is in fact the case. But let's go to the charts and see what they're offering. I told you a week ago, 2 weeks ago, that if the market declines, a battle would form, I thought, at the 18-week moving average of closes. If you don't agree with me, fine, but the charts don't lie. Now, will this hold? Is the market going to go to another down leg? I happen to think another leg personally is going to come in because we're only at September 10th. I don't see what's going to hold these markets up at this point. I love that the stocks are revaluing. I think that's important because it sets you up for a later in the year rally, but we'll see if I'm right or wrong. So far, you have to agree you've pulled back. You can see how the market ran into a buzzsaw at these levels right now. Clear this and you're probably on your way into the 6,000 level. Clearing it's not going to be an easy task. You've got a pattern right now of a higher high and lower low. So it's a vertical price decline is basically what you've experienced. The market did not really hold well the 18-day average. I thought it would do a better job than that on its first attack, and that's a weak sign. It's not doing what the weekly chart's doing. Where it fought the battle and is fighting the battle is the 100-day average. If that gives ground, you open up to get back to around the 5,300 level, the 200-day average of closes. But where's that Bollinger Band? Well, it's right here, so you know where the battleground is. It's shaped up to be the band and the 100-day average, and traders are probably fighting it all out between there and the 18-day average. In momentum, you had been oversold. You've alleviated that. So now the question is, what's the next move? And because you don't have a trend, you got a vertical decline that found the support. It can go either which way. When you come to the NASDAQ, unlike the S&P, it's been in a downtrend. It got to the 200-week average, which is a big number. I mean, that's almost a one-year moving average, if you think about it. And the Bollinger Band. That stopped the decline, but I see severe resistance on rallies anywhere from 19,211 to 19,334, the combination of the 100 and the 18-day average as a resistance point. When we look at the Dow, it too is in a downtrend, and it too is trying to find its support against the Bollinger Band. If that fails, then your next support levels come in over here, the 100-day average. It is a market that's in a downtrend. To take that out, you got to get over the 41,064 level. We'll see if that can happen. In the Russell, you're into the major support on this break. The 200-day, the 100-day in green, and the Bollinger Band, and you're oversold. I think the smart money is out of this market on the short side in futures, waiting to see what next. In bed, they'll get back in. Oversold, be careful. Told you we'd switch gears and get to the December 10-year notes, and here we are. You can see how the market has got what I call that gorilla glue trade. It's when a market hits an upper band and over 3 days in a row just keeps hitting it. Now you're at 5, including tonight. That's powerful action, and it often tries to form an embedded reading, which would add to the bullishness. So the market's leaving the sideways action and taking off on you temporarily to the upside. You're overbought in the 5-year note, but you get overbought just before you embed, and it too has that gorilla glue trade. So breaks in these markets, now they're still going to probably be bought in the marketplace as traders think lower rates coming. The dollar index has higher lows, higher highs. It's almost instantly overbought. It's got a 71.47 reading right now, and it hasn't opened yet tonight. When it does, that number should climb a bit, and this Bollinger Band is going to fall rather aggressively. Big question is what's in store for the dollar. When I look at the eurocurrency, well, the market's coming down, challenging these lows. It might go to the lower Bollinger Band, but look how oversold it is. Be careful here. The dollar up overbought, the euro oversold. The two can go like that as they get corrections in them. The pound is still bearish, but oversold, so I'd be very cautious. Oversold markets have a tendency to correct by either going sideways or rallying. You'd have to go to embedding, and you're nowhere near it on this market at that point. In Bitcoin, you got oversold. You were at the Bollinger Band. You had been riding it down, and then you popped away from it. You never did embed, it's just getting a bounce. Resistance is formidable from the 200-day average to the 18 right here, as they're very close to each other. Then we get to the crude oil, which when you get news of a hurricane and they're shutting everything in and you can't hold, you create issues. And that's what you've had. This is a market that was just at 79. It's fallen $10 a barrel. That's a huge drop right off the bat. In WTI, it's the same type of action. And you've got markets that are embedding right now. Heating oil the same way. So like food, isn't it amazing that just like food in front of a presidential election, all these numbers come in? Do you think it sways voters? That should be interesting, because you see it at the gas pump now, the lower prices. You see it if you're ordering your groceries. Well, I don't think the Democrats are doing a bad job. You have a tendency to forget what happened in the back and look at what's happening now. This could just be coincidence, sure. As I look at the market here, I thought that we'd fight a big battle at the, as you know, the 18-day average. And the market's up because the market is saying that, well, if you're not shutting in that much, we need that natural gas right now as you're building storage. But soon you end that storage build and you start going the other way in the market. Just be ready for the seasonals. So that's where I'm at on all this at this point. Want to remind you some of the tools that I use. One of the tools that I use, I learned a long time ago from a trader many people heard of, Larry Williams. Larry used to manage money through my old brokerage company, Ira Epstein and Company, many, many years ago. And he'd be in the office, and I did seminars with him around the country. But he taught me this. Larry was a developer of pivot points, and I didn't even know what they were or what the term stood for. And he does a lot of that. He's quite good in charts. And as he did all that, you learn what these things are. And I've been using pivot points for decades. This is not new. This is 30 years, 40 years. And why? Well, one of the things that pivot points do is they give you a center line, and from that you're looking for cells above and below. Day traders love this for their technique. Position traders, which I most certainly fit more into the camp of, look at this and they say, what if I could find a number I'm looking to buy that makes some sense on a downside or upside that looks a bit stretched out? And I'm looking in that zone. Well, this is one way that you get that maybe you can pivot with it, if you will. See areas that make more sense. And then I took it from what Larry did, and then I added slow stochastics to it. So if you'd like to learn how to do all of this, and it's fairly easy. I put a 3-part series together for you. And on that 3-part series, it's videos. You probably have pivot points on your charts. You see what I do. You try to do the same thing and learn from that. How do you get this? It's free on our website, because I like to show you what I teach in my other courses that are charged for. How do you get this? IraEpstein.com, under free offers, or move your cursor to the top up here. I'm Ira. You have yourself a great evening. I'll catch up with everybody.